Good morning. Portfolio performance. That's what we all want. We're going to have a look at that a little bit later in Trading Tactics. And you can all see my front page here, NAB on fire, definitely on fire. And we'll have a look at that stock a bit later on. Hi, my name is Richard Lee. I manage the stockradar.com.au website for you, where we use a unique high conviction strategy to focus on stocks that are going up. Okay, now, this is the time. Clear your mind. Clear your chart, okay? We've got all sorts of things going on, up, down, sideways. Clear your chart of debris. Get rid of all the stuff on your chart, all your preconceived ideas and all your notations, okay? And then start again. So what this will do, when you look carefully at what buyers and sellers are doing, you are objective and a picture of reality will emerge, okay? Go through the steps because the process gives you the knowledge you need, okay? Up, down or sideways, I'm only interested in up. Remember, know why you buy and you'll know what to buy. Okay. Portfolios, how do you design them, build them, make them work? Now is the interesting time to test the product. Is it working and what are your expectations? Are they valid? Well, Trading Tactics, we're going to have a look at that a bit later on. Okay, so general format for the day, as we know, is we look at the background stock, overseas markets, look at the ASX 200, go through the portfolio, look at some ASX stocks and go to Trading Tactics, talking about building your own good portfolio of stocks, the ones that go up. Okay, so let's go to firstly the markets. Dow Jones Industrial Average. Okay, it's still, it's had a couple of good nights for sure. We're still in this little downward phase. It's below the average. Volume has been heavy. Momentum not so good. So it's a little bit of a rally of hope at this stage. We have no real substantiation there. Especially on a volume basis at this stage, so still holding in a bit of a downtrend here at the moment despite two very strong days of up. And the Nasdaq has been very similar, had two very, very good days up, still not really a dent in this whole move down from 16,000 to about 13,000, and we had a little small move up. So the sellers are still well in control of this, and I just want to go through the process here to help answer your questions. So as you know, and this is what you do, this is how you would arrive at a solution. The process will answer your question if you have your process. My process is price action, lower highs and lower lows, okay? Volume on the downside is heavy, the moving average is turning down, and the momentum is in negative territory. Tells me be careful, stay neutral, preserve your capital. That's just the Nasdaq. It could be a specific stock, but I'm just saying to you, this is how you go through the process to have a look at this. So for the Nasdaq, despite having two very strong nights up, it really hasn't done a hell of a lot to reverse this downtrend picture. Okay, now let's go and look at some commodities. Gold, tried and failed, had a big spike up. It's been a bit of a frothy sort of situation here with gold and crude and stuff like that. Big rallies and big deflation following that the fact that the market didn't go through here. No real volume here. It's a big volume day here, and the price finished on its low, so there's plenty of selling in there at the R1 level, and it's come down further today, so we might be back in this trading range. Nothing really here. The only positive here is your spark of life, is your momentum, and your moving average, which is turning up. Price is struggling at R1, and volume is really nothing to choose on, so to gloat about. So really, it's probably a fairly neutral trend intensity rating there. If we go to crude as well, big blow off here. We've had a big uptrend for 2 years. We've had a big blow off here the last couple of weeks. We'll step right into the high 130s, right back now to 100. So that's a bit of a killer. But it did get very excited and it went too fast. So whether it settles down to stay in this uptrend, we'll have to wait and see, or it breaks down, we don't know. But at this stage, there's still putting in rumbles under the price to keep it bubbling along, I think, at the moment. So all things look pretty good for crude, or despite that very quick runny and pullback, we're still within this uptrend move at this stage of lots of higher lows, and that's great. Okay, so let's bring crude. Copper, another failure, like gold. It tried and failed, and it's back down here. This is the area I'm looking at. The moving average, little trend line, S1 down here. There's a bit of volume here which pushed it up. Momentum sort of started, now it's gone limp again. So we have failed here pretty well, so we're back to the trading range. That's very disappointing for copper. And, you know, we don't want to see it go down below here or down below here, but stranger things have happened. There's a very bullish world out there for all the metals. Which worries me a little bit, but so we might have a little bit of a correction possibly, but this is a failure here by both copper and gold. Not a good picture. Okay, so now I can go on to the XJO, the ASX 200, and we'll have a look at the realities of what that's telling us. Okay, Big rally, pullback, lower highs, lower lows again, below the average. The only positive we really got here is the support at 7,000. We're getting a rally. We're going to be up testing the average today. We're up probably 100 points, something like that. So we'll just have to see what happens. But there's a lot of work it's got to do before it starts taking. It's going to start trending up again. Okay, so that's the ASX 200. The portfolio was up one this week to 21. 18 stocks and three ETFs, okay? 18 stocks out of 167 covered and 3 ETFs out of 21 covered. So there is no trend there. When there's no trend, we preserve capital, we be careful because we don't really know what's going to happen. The odds aren't in our favour. Okay, the 5-stock portfolio has 3 stocks in it now, and the 10-stock portfolio has 4 stocks in it. Both, because they're not full, it's a bit of a wary situation because it's saying the market is not that happy. There are a lot of stocks that aren't trending. The good thing about it is we are ready and prepared if you want to need to buy anything else at the moment. So we have a couple of spaces there. Energy and property is still on top of the sector ratings. All the sectors are pretty weak. If you go through the trend intensity situation on my trading centre page, you'll see exactly what they all look like. The building a 5-stock portfolio started in March. It's done pretty well. It's actually up 10% for last year. We've had a very good couple of stocks in there like Computershare, which we still have. We have Woodside, which is still showing a profit, although that's been clipped a little bit, and IPL's been added. So we've still got 2 allocations in cash ready to go there, and a couple of stocks holding pretty well. So that's doing okay, and I might have a little look at that later on in trading tactics as well. Okay, so let's get to some stocks now. So firstly, our little stock at the start of here was NAB. It's on fire. I mean, it's just been rallying, outperforming all the banks, and it's still got its sizzle. Despite the market correction, this stock has been very, very strong. The banks haven't gone down a lot, but they haven't really gone up a lot, but this one is going up. Volume is pretty good here. If I just squeeze this up a little bit, you can see it's not too bad here, the buying side. A little bit of selling here, but that was absorbed and kicked it up. The momentum index is positive, but pretty flat, which is just saying the trend is upwards, but it's not really rocketing higher. It's just going at a steady pace, and that's fine. But we are looking to push through this R1 level, which is a bit of a key level here, and has resisted for some time back here. So you can see it'd be nice to see it through there. Trend intensity rating is 9, above the average. Volume is good, momentum is positive. So NAB is one of the hot stocks in a world of not so hot stocks. Okay, one we had it a couple of weeks ago was, for those of you that follow Stockradar, was Sims Group. It's been an interesting situation because we had some good trades through here, the last rally off here. 2 trades there which generated some good returns. We've now come back, we've had a correction. It's held pretty well above this sort of support area, highs through here, lows through here at S2. It's now broken through here, okay? So we've got a price break to new high, the moving average is turning up, volume is better and momentum is strong. Will a trend develop? The odds are say it will, okay? So that's where we are with Sims Group. So if we have a look at Sims Group, it's currently about $20. Everything looks pretty good there. It's broken to new highs there, and if we go right back here, we can actually see that it actually was up around $40, $45 at one stage. So, it's still got plenty of scope to rise there. The break is very good. This is a big resistance area here. So Sims Group is an interesting situation for you there. Again, always work with your stop because there's never a guarantee in this business. Okay, so that is Sims Group. Commonwealth Bank, it's just been resilient. The key thing is going to go down, and it doesn't go down. It's probably up a bit today, I would think. But it's we made new highs a while ago, and it went on and then it struggled, and it's been travelling around this new high for a while here. But just recently, we have got to pick up a bit of volumes returned here. The momentum index is neutral, the moving average is flat, so it is in a neutral stage. But it was looking a little bit weak there for a while. So we just have to watch this. It's probably up a little bit today, but really it's a break out of here. This could be a small reversal possibly, but I've really got my resistance point up here about 110, 109, where the old high is, to really trigger a new entry there. But for the moment, CBA is trying, NAB is making new highs, not such a bad thing. In the banking sector, we could use those banks to help us push this market, because they haven't been around for quite a few months, since August last year. They have been going sideways, or June last year. Okay, so CBA is looking interesting. Keep an eye on it, but it's got to get through here before I'm really convinced. Okay, Beach Petroleum is one we've followed for a while. It's been an interesting stock. For a sort of a commodity stock, it's actually traded reasonably well with the technicals. So if we just look at it here, Beach Petroleum, trend intensity rating is 9. Okay, its rating is 9 is because it's above the average, the trend is up, volume has been good, and momentum is good. Until a couple of weeks ago, when we started to come down on some heavy volume, this is still okay. Everything's still okay here. So just go back a bit to where I was till I got the reversal. We've got a double bottom here, okay. We then have a rallied off here. So this was a good support area here down at $1. We then had a rally off there. It pulled back to a new higher low. So I put my trigger reversal at that high point here as a potential to reverse a trend to move higher. And it does push through here, okay. We've got all this action happening here, which is a very good sign before all this has happened. So again, I'm conservative. I wait till all those odds are really in my favour. But if you look here, this rally here was on huge volume, okay. Came back and made a new high, and then here we're starting to break this downtrend line and we're starting to move above the average. So the pieces are starting to fall away, and finally we've got our trend reversal point here, which it is. So there's no choice. That's the decision of the trade plan. So we bought this stock and we're holding it at the moment with our stop in place. So admittedly it's come back. It's not too bad today, I don't think. So we'll just have to wait and watch and see what happens. We get taken out, we get taken out. As I said before, Mr. Stokes is on this register, which is always an interesting thing and not to be discounted. So it's an interesting picture, but it is behaving pretty well technically. So we'll just keep an eye on Beach. We're holding that one for the moment. Okay, well, consumer discretionary. Is there something happening there? I don't really know. The JB Hi-Fi chart is still within that trading range. Harvey Norman has just started to push off, and I'm just going to squeeze this bit of volume down a little bit so I can get a bit better picture of the volume here and the whole picture. So trend intensity rating is -1. It's held a fairly good support area across through here. It's tested it twice. It's rallied through the peak here. We didn't get enough trend intensity for a reversal, but above here, R1 we have. So, but the evidence is starting to build here. We've got move above the average, which is starting to turn back up, first time in a while. We're getting some reasonable volume through here, quite a lot of green bars following this rally off that low there at S1. And this is now starting to move positively. Not quite yet, but it's better. So it's a work in progress, Harvey Norman. So we'll wait to see what happens there. But there are lots of surprises around at the moment, with the banks, the commodities coming back, Harvey Norman starting to go off again. So it's an interesting situation, but we just need to be nimble and on the ball and look at these opportunities at face value. As I said before, my charts are fairly simple. I don't draw too much on the chart because it just confuses me. I try to keep the picture pretty clear and built around my trade plan to things that are important to me that I know work. Okay, so Harvey Norman, this is certainly one for you to watch here, an interesting one, and there's certainly a bit of demand coming back into that one, but R1 will be a difficult point to get through. Okay, now the last one I want to go through today, Elders. What's happening at Elders? All of a sudden, we said it bounced out of its trading range, so let me just fix up this volume here for you. Okay, so Elders has been stuck in here for a while. Trade intensity rating has been -4 as of last week, so that will change this week. But we've got this downtrend of peaks here. It was looking fairly negative. It was struggling at this high point here. And of course, we get surprised, as the market always does. It just all of a sudden jumps on a very good profit report. So we've got huge volume buying here. We've got the spark of life and momentum. It's above the moving average, and it's now through this R1 level. But it's got to hold it for the week. Okay, so we're not through yet. We want to see a close of at least 1% above there to signal the buy for next week. So that's an interesting situation. At Elders, certainly one worth watching, and trying to get agricultural exposure has always been difficult because they're always, excuse me, a little bit ratty sometimes, whether it be Grain Corp, Elders, or some of those agricultural stocks. They're quite tricky sometimes. Rural Funds is one that's been doing very well and has a good trend. But Elders would be nice to see that through this area because it is an important resistance level, and a breakthrough here can set off another little trend for Elders. So keep an eye on Elders. What else have I got for you here? Nothing much there. Okay, that's about all the stocks that I have today. There are plenty more stocks. You can now take a free 2-week trial of Stockradar and have a good look around, paying special attention to our main trading page, the Trading Centre. That lists all my stocks, entries, exits, stops, reversals, all in one big table for you to go through. And then you can create your own little table in your portfolio watch list if you're just the stocks you want to watch. But the Trading Centre is the main page, and it has all the things there, including the trend intensity rating on every stock. So take a trial and have a look at that. Okay, so that's the stocks. Now, what I want to go through into is trading tactics. Okay, last week we went through cool heads, cool decisions. Just a small reminder of what the XJO was doing. Crude picks were up, stock picks have evaporated, risk was on. So I was looking at that cool heads. It was just a very excited week. I was just looking for people to just make sure they take a step back and not too caught up in the things. Is they're talking about clearing your charts off, having a fresh view, and look at things because we do get embroiled in things. Okay, what I'm going to do first is just the main focus on building a portfolio, what you do and how you go about it. Just a very simple overview for you. You must have a main focus. My main focus is to follow trends. And my simple attributes of that are I will be exposed during trends because my strategy does that. I buy trend reversals and new highs. That gets me exposed to new trends. But I also protect during downtrends. So I also work with a very strict risk management, strict risk management strategy that protects me during downtrends. Okay, I will not risk a lot because I don't want to lose a lot because it takes too much to claw back. I'd rather get out and stay neutral and get back in a later date rather than carry a big drawdown. So that's my main focus, being exposed during trends, new highs, trend reversals, and protected during downtrends. Important. Firstly, before you start, you've got to do a couple of things. You need to be sensible and disciplined. Now, by being sensible, I mean looking clearly at things, having perspective, and if you're very excited or very anxious, you're probably not going to make good decisions. You need to have a wave of serenity over you to try and keep your perspective in a good spot. So be sensible and be disciplined. The biggest problem of any trader is the discipline to follow their rules, okay? And the next one is don't be emotional. Don't get excited. So be sensible, not excited. And that's really important. The poise, you must be able to behave the same way in a bear market as in a bull market, okay? Clear vision. Okay. So since March 2021, the building a portfolio has been up 10%. The ASX 200 is relatively flat. So that the current status really says it's unusually low with only three stock picks of 5. Okay. Now those settings, the 3 stocks trending, 2 allocations and neutral in cash. They're not losing money, but I'm prepared to jump on new trends. The settings are right. If the trend was the market was going up, my portfolio should be full. Okay, if the trend of the market is not going up, I'm probably not going to be full. If the market's going down, then I might not have any. But at the moment, there are a few stock picks, be it Computershare, NAB, Woodside, whatever. There are some stocks going up. So, but the settings are right because I do have a bit of cash there, and I do have a bit of stocks in there. So that's really what you're looking for in your portfolio for your settings to be right. I mean, I don't want to be outright bearish or outright bullish at the moment. It's a 50-50 chance, but I have certain signals that I need to follow. So, what seems impossible is actually I'm possible, and it is possible. So, okay. So always take the long view of what you're doing. Don't take a snapshot of a month, 6 months, or a year. It doesn't reflect. The market does downtrends. It does the 30% to 50% correction every 10 years. The smaller correction every 2 years, every 5 years, and then a 10% correction every 2 years. There's always those things happen. We need to be able to absorb those things, manage those things, okay? So take the long view. There are going to be flat markets, bumpy markets, and downtrending markets. We need to deal with them all the time. We'd love them all to be uptrends, but they're not. But for the majority of the time, the market goes up, okay, which is good. So remember that, because in times like this, you can just wait patiently for the time when it does go up, like it did for the last 2 years, okay? That's why we trade long and are patient, okay? Always put the odds in your favour. So you wait until those odds get into your favour and you've got a strong trend and you've got a strong signal. So that's what you do. So take the long-term view because it's not always going to work out. I'm lucky that the portfolio I started in March is up 10%. Other people won't be so lucky, especially if you started in August last year. It wouldn't be. So you must take all those things into account. Don't fight or expect. You can't make things happen. You have to wait for the market to come to you and let it present you with the opportunities. Sometimes there simply aren't trends to play with, so the safest place is cash because you're not losing money. Okay, I know we're not making much in cash at the moment, but we're not losing money, and that's important because a lot of stocks are going down. Be patient and endure the doubtful phases. Okay, just go through them, just live through them, and sometimes it's best to do nothing. The aim. A good portfolio will always have the settings right for the market conditions, like the building a portfolio is right at the moment. That's driven by a systematic response to price action, okay? So stocks have fallen out, there's not many around to go up, so I've got cash there. So my price action is driving what I'm doing, not what I'm thinking, not what I feel, the price action. So not by what we think, okay? It also helps to respond to a common problem. Building a portfolio with the rules, and it helps to respond to a common problem, which I mentioned earlier, which is discipline. And every person I get comes to me with a portfolio and wants to join the portfolio service, or wants to join Stockradar. They say to me, you can help me with discipline because you have the rules in place. I can sort of do that, and I can lead you, but I can't make you do it. But I'm trying to lead by example so that you can see that when I do take the signals, invariably they are right. Okay, so discipline to execute signals appropriately, not just buying, but selling. Selling is the hardest thing to do, okay, because you've got money on the line, whether you're winning a lot, losing a lot. There's lots of things that will affect your decision, and it really shouldn't affect your decision. Cut out the ifs, buts, and maybes. It's a just do it thing, my Nike motto. I just did it. So it's really about just doing it. Okay, so the portfolio, I'm just going to go briefly through the building a portfolio just so you can have a look at what's happened there and what's happened over the last year. So I'm going to go through the trades, the positioning, and the outcome of it, okay? So for building a portfolio service, so these are the trades that I've had so far. I can't see the closed out positions. In fact, I can show you that better here. So these are the positions here. I currently hold Computershare, Woodside, and Incitec. You can see when I entered them. You can see what sort of portfolio it is. You can see how many shares I have. It was only a $5,000 portfolio I started with, $1,000 in each share. Okay. You can see the stocks that I hold, Computershare, Woodside, Incitec. You can see the profits is 51 on Computershare, 10% on Woodside, and down 1% on Incitec Pivot. But for the moment, if I go to my dashboard, it tells me I'm up 9.7% overall, including my dividends, which is not a bad thing. Okay, so if I go back to the trades here, I can also go across here and see all the sales. Now you can see all these sales here, JB Hi-Fi, Mineral Resources. Now there's been quite a few losses, in fact more losses than wins, but I'm still up 10%. That's because I run my winners better and I cut my losses quicker. Okay, now there's been a couple of tricky losses there, but still basically the most important thing is my portfolio is in positive territory because I do what I say I'm going to do by cutting out losses and running profits. And things like Computershare at 50% is a big winner, okay? And even Woodside, it's already up 10%. It's only since the end of February, so that's already pretty good, although it's been up a lot further, but still. So that's what the portfolio is, and if there's new ones that come about, I've got 2 allocations ready to jump on that, okay? So I'm in a fairly good position on my portfolio. Okay, so that's the portfolio, that's how it looks, and that's what it does. Okay, so if I just to finish off this part here, how did I start? Okay, I built a plan around a market edge, okay, that rings your bell, something that you think you can see in the market. You don't want to do everything. Just if you can just focus on one single thing, really focus on it, have conviction, you will do fine, and that's really important. So something that rings your bell, and all I want to do is follow trends. If I see a trend, I can then jump on it and follow it because I know what trends do. They keep going. Some don't, but most of them do. So I just play trends. Simple rules generate simple but solid outcomes. Okay, and I really am about simplicity of rules. And you know, I have certain rules. I have 4 main tools that I use, and I have some simple rules built around them. And they very rarely conflict. In fact, they don't conflict because they can't conflict. If they conflict, I'm in trouble. Okay, so simple rules generate simple but solid outcomes. Keep that in mind. So be smart by not being overly smart. Okay, sometimes we want to overanalyze, we want to overcomplicate things too much. Step back, just keep it really simple, just simple trends and some simple signals to help follow it. And that may not be your thing. You might want to trade trading ranges, you may have other things that you do, but that's really what it's about. And also you're going to find there are exceptions. Now, some things you can't cater for, like the market downtrend every 10 years. You're going to get a big correction every 10 years. So you absorb unfixable market exceptions. They have to be absorbed into your strategy. So you have to be able to make enough money to be able to wear those things, okay? So your portfolio's got to be solid and your trade plan's got to be solid. So absorb unfixable market expectations, like trying to finesse an entry. You know, should I move it? You know, finessing an entry is really, to my mind, a waste of time. I just buy it market, finessing an entry, you're going to win some, you're going to lose some, and you're going to stress out over it. Don't worry about it, just do it, basically. So absorb unfixable market exceptions, don't stress over them, they happen. Corrections happen, entry prices, well, you can try and finesse that if you like. There are all sorts of things that happen, but I take all those out of the equation because they're very stressful things and they just don't matter. Okay, so that's a bit about portfolios. I hope that gives you an idea. Anybody who wants to look at the portfolio service, give me a ring, have a chat, and we can sort something out. And if you just want to subscribe to Stockradar, there's plenty of stocks there for you to look at and hopefully help guide you in the right direction. Okay, so that's really all I've got today. All I can say is good discipline breeds good trading. Good trading. So try and be as true as you can to your trade plans, systems and strategies, and you will come to know and build the confidence in the fact that the trade plan knows best, and definitely more often than you do. Okay, so have the discipline to follow that trade plan. Stay safe, watch your trends, heed your stops, and I'll see you all next week.